Alright, in this video I want to talk about what happens if your S corporation has debts that were written off or forgiven, extinguished, whatever you want to call it. In other words, you went to the creditor, or you went to the person that held the note, and then you negotiated a reduced principal amount, right? So they forgave either all or a portion of the debt. The reason why this is important is because if that occurred during the year, there's two issues. One, you have to answer a question in Schedule B, which asks whether or not this occurred, how much of the principal debt was reduced, and then two, there's potential income inclusion, right? So on the Form 1120S and Schedule B, the corporation must answer the following question, right? Did the corporation have any non-shareholder debt, right? So third-party debt that was canceled, forgiven, or had terms modified to reduce the principal amount of debt owed? If yes, you answer yes, and then disclose the principal amount that was reduced or eliminated from the company's balance sheet, right? So now this is the issue that people are most concerned about, right? Is it taxable or is it not? Well, generally under Section 61A12, canceled debt is income, right? So if you have principal amount of debt canceled, the amount that was canceled, so the principal plus, let's say, the accrued interest, must be included in gross income for the taxpayer. So this amount is generally reported on line 5 of the 1120S, and so it's basically lumped into gross income or gross revenue, and you're going to pay tax on it when the income flows out to the shareholders on their K-1. So let's look at this example here. We have an S corporation with outstanding credit card debt of $40K. The S corp approaches the company and negotiates a reduction in the balance owed, right? So the credit card company agrees to receive $25K in cash, and then the company would forgive the remaining 15, right? So they're going to pay 25, and then 15,000 is going to be wiped away. On the 1120S, the S corp should include the 15,000 in gross income on page 1. And then on Form 1120S, Schedule B, the corporation is going to answer yes to that question, question 12 for the 2020 form, and then enter the amount of the reduction of 15,000, right? So that's the amount that was forgiven. Now, that's the baseline rule, right? It's included in income. What can you do to try to not have to pay tax on that canceled debt income? Well, there's a couple exclusions available, right? So it can be excluded from taxable income under Section 108A1, right? So how do they go down this process? Who qualifies? Well, if the amount of canceled debt can be excluded from income, the Form 1120S tax return should include a 982. So Form 982 is an exclusion from taxable income for canceled debt, okay? Now, if the debt is canceled, it still has to be reported, right? But now it's going to be reported as tax-exempt income on Schedule K. And so that's important because it's not going to be lumped in line 1, ordinary income or loss. It's going to be separately stated as a tax-exempt income line item. So it still impacts the shareholders' K-1, their basis and everything, but it's going to be separately stated, and so that's how the shareholder knows that they're not subject to tax on it. Now, what's the most popular exclusion? It's insolvency, right? So obviously you can have debts discharged in bankruptcy, and there might be exclusions from taxable income there. But the easiest one that I see, and this is most often what occurs at both the company and individual levels, is if the entity is insolvent, right? So insolvent corporations have debts that exceed the fair market value of their assets. So it's really a simple computation. You look at the company's balance sheet, what's the fair value of their assets, what's the fair value of the debts they're being discharged, and if the company is deemed to be insolvent, then they can exclude these amounts from taxable income. So let's look at this example here. We have an S corp, outstanding credit card debt totaling 40. Right, they go to the company to pay 25,000 in cash, and the credit card company is going to forgive 15,000. So same fact pattern as above. Now, if the corporation's insolvent, it's going to attach a 982. Right, on the 982, they're going to exclude $15,000 from income, and then the 15K is included as tax-exempt income on line 16. And this is really important to note as well. The tax-exempt income will still increase the shareholder stock basis. So there was a court case a number of years ago the Grillitz v. Commissioner one, where the IRS effectively said, well, if you don't have to pay tax on this income, it shouldn't be an increase to your stock basis because you're kind of already getting the benefit, right? So we shouldn't give you the benefit twice. And the courts disagreed. They said, well, it's still tax-exempt income. It still increases the tax basis. And so, yeah, so you can get tax-free income if you are insolvent, and the increase to your basis is going to be for an equal amount. Okay. Then back to Schedule B here for this company, they would answer yes to question 12 regarding the reduction of shareholder debts, and then enter $15K for the exclusion, or sorry, the amount of principal debt that was reduced during the year. So, yeah, so it covers high-level kind of S-corp forgiveness of debts. Again, very important that if it does occur, it's disclosed on the tax return, and then whether it's taxable or not taxable, you have to follow the appropriate procedures, right? If you're going to try to exclude it from income, make sure you're filing a Form 982. That has to be included. You can't just decide that, oh, I'm insolvent and I'm going to make it tax-exempt income. Doesn't work like that. You need both pieces, right? So you've got to qualify, file the Form 982, and then appropriately report it as tax-exempt income on the Schedule K, line 16B. All right, so that covers it. Thank you so much for watching. If you have any questions, please leave me a comment below, and I look forward to seeing you again soon. Thank you.